Hello traders, this is Mike from Bearball Traders. I want to discuss how the trading psychology concept of frustration can lead to poor trading decisions if you're not able to step away from the trading desk and regroup. As always, if you can hit the like button, subscribe to this channel, and hit the alert button, it's always appreciated. If you're new to trading or been trading for a while and want to understand more about trading psychology, you can always pick up one of these books by Andrew and myself that dives a little bit deeper into trading psychology. It's available on Amazon. So let's get right into it. What is frustration? Well, frustration is that feeling of being upset or annoyed, especially because of the inability to change or achieve something. And in trading, this is usually relates to our missed opportunities, right? Where we want to get into a trade, but we decide not to, or something happens with our platform that causes us not to get into it. And when we miss that opportunity, especially when the trade works out, it usually leads to other negative emotions, those of anger, irritation, self-doubt, right? And when you get those, that can cause you to become an undisciplined trader and trade outside of your edge, or make poor decisions in your trading. As traders, we need to learn to let the past go, right? And you got to be able to move on and stay present in the actual moment, because that's the only thing that you can control. You can't control the past and you can't control the future, but you can control how you perform in the present moment. Now, in theory, it sounds pretty easy, but in reality, we all know it's very difficult. And I'll show you how difficult it is by my trading today. I had a buildup of frustration that all started right off the bat at 9:36 with PayPal. This is a trade set up perfectly within my trade book edge. I wanted to take it, and as a matter of fact, I even pressed the enter button to get into the trade. However, because I didn't have the montage selected, I got an error and it didn't execute, and the trade ran without me. As you can imagine, a little bit of frustration came in, but it's early in the day. I've experienced this before. I knew that there would be other trading opportunities, which I got approximately 7 minutes later on SQ. But again, by the time I was able to establish where I wanted the stop and if it was a good risk to reward, the stock had already popped past the high of the day and was already making a run to up higher. Now, both these trades, PayPal and SQ, both would have hit my profit target, which would have meant I would have been done trading by 9:45. Great trading day. However, because I messed up on my entry on one and wasn't quick enough on the other, I missed two opportunities, and now I'm sitting at basically no trades on the day, with frustration continuing to build. Now, I recognized it was building. I took a pause, took a deep breath. I was like, I can still do this. The next thing that came up to me at 9:51, again, approximately 8 minutes later, was BABA. And once again, I repeated the exact same mistake on XQ. And it wasn't really a mistake. I just wasn't quick enough in establishing where my stop was and placing my entry. So I missed this BABA trade. Again, ran to my profit target, would have been completely done over my profit target for the day. As you can imagine, at this point, I am extremely frustrated. I am building up. I'm angry. I'm yelling at my screens. I'm using explicits, and I'm not in control of my emotions, which in turn means I'm not going to make I'm going to make poor decisions when it comes to trading, which of course, that's exactly what happened. I quickly glanced over, saw SQ put in this indecision doji and said, yeah, take that trade to the short. You're going to make money to the short side because you missed these three other trades. Great trading logic, right? Absolutely not. This isn't my setup. This isn't when I should be trading this setup because it's before 10:30. It's not in my trade book. But the one good thing that I did do is I was able to maintain my trade management. I took a partial at a moving average, and I went ahead and got out at break even. Of course, this is dirty money traded outside my trade book. Reinforce that you can make money outside your trade book, which is not good, and I gave into the emotions. What I should have done is I should have walked away before making this trade, right? And because then I could have regrouped and reevaluated and made good decisions in the present moment. But because I didn't do that, I ended up breaking 4 of my rules. Traded outside my trade book, didn't follow my entry plan, let the emotions get the better of me, and let the chart dictate to me what to do. But after this trade, I recognized I wasn't in a spot, so I stepped away from the trading desk so I couldn't make any more bad decisions, right? And I took a break. I went downstairs and I made myself a cup of coffee. I turned on the TV, and then after a couple sips, I muted the TV, conducted some breathing exercises, got back into the flow to where I was calm and thinking about what I needed to do at that moment in order to continue my trading day. And when I did that, I decided I'd go back up to the trading desk and give it a shot, knowing that when I sat back down that I needed to assess myself. I needed to know if I was still thinking in the past about the trades I missed or about the future, about what I wanted to happen and the outcome. But I wasn't. Instead, I was thinking about the present. What is the stock market telling me right now at this present moment, and how do I need to react, or what do I need to do right now to put on a good trade? Because I was able to do that, I had 3 decent trades that followed that up. First one being on the MNRA at 10.23. Got a partial out at break even, well within my trading plan. Got stopped out on this MNRA trade because I got a terrible entry. The entry should have been at that purple line at 173.95. But if you trade MNRA, you know the spread can go from 5 cents to 80 cents in a heartbeat, and that's what happened. When I took that, I made the decision as soon as it made a new high off that 1 minute candle that I was out. I didn't want to stick all the way to my stop losses. I had a little bit of increased risk with it. So overall, good trade, just didn't work out the way I wanted. But finally at 12:14, almost 3 hours after regrouping and reassessing myself, I was able to catch the trade that made my day. On a short on PayPal. Took it to the short side, partial down. As you can see here, I got a range order for my entry along with my profit target. It did eventually hit that. Took a little bit longer to finally get down to that pre-market high. But overall, ended up with a really good day. Now, one of the things that we'd like to offer you here at Bear Bull Traders is if you're interested in the psychology, we're giving you a discount promo code PSYCH40 that will give you 40% off your first month of an elite membership or the annual membership. And this is going to give you access specifically to our psychology team, where each one of these individuals presents once a month, every Wednesday. They present and they'll cover different psychology topics. This offer will also give you access to all the other educational material that we have on Bear Bull Traders. So thanks for watching. Hope to see you in the chat tomorrow morning.